Alrighty, welcome everyone. Thank you for joining. In this video, I have looked into the future for you. I've seen what's going to happen in 2022, and I'm going to lay out 10 big things that are going to happen in 2022. These are my 10 big predictions of 2022. So we'll be going over each of them. I'll be explaining why I think these different things are going to happen. And of course, we're also going to be looking at my story fund portfolio. This is what we track on a weekly basis. We'll look at how it's doing against the rest of the market and my investing plan, how I'm adapting things over time, and all of that good stuff. So we have a lot to get to in this episode. Let's go ahead and jump right in. Now, before jumping into my 10 predictions for 2022, I want to give a quick update on the Story Fund. If you're not familiar, the Story Fund is a growth-centered portfolio where I track it week by week and I show you transparently how it's doing against the benchmark, which is the S&P 500, the broader market. And I'll show you if it's doing well, and I'll show you if it's doing poorly. Right now, it is underperforming the S&P 500, and we can take a look at that. Here is what it looks like against the S&P 500. During different time periods, you can see the performance has been above, it's been underperforming, then it's been above a bit. And as of right now, the latest data as of about a month ago, a lot of the stocks in the Story Fund sold off a lot. I mean, they really had their valuations chopped down. It did okay. It didn't drop as much as other funds, but it still had a lot of losses. So around 30 days ago, you can see this steep decline in performance here, especially relative against the S&P 500. Right now, SPY is up around 26% since inception of my portfolio, and mine is up around 16%. So the Story Fund is trailing the S&P 500 as of right now around 10%. So let's go ahead and look at why that's happening. First of all, most of this has occurred over the past 30 days. If I look at the past month, my portfolio is in the red by $4,159. That's 3.72% loss in the past 30 days. If we look at the S&P 500, SPY is in the green by 2.69%. Even the QQQ is in the green by 0.49%. So the major indices are in the green over the past month. The Story Fund is in the red. And that's what's contributed to this big delta between the two. Now, when I look at the companies that have really contributed to this loss over the past month, we have IGV, which is just an ETF of all the US software tech companies. It's down 4%, 3.88%. So just tech stocks in general have sold off over the past 30 days, which has really affected my portfolio because most of the companies in this portfolio are tech companies. Google's actually in the positive, which doesn't surprise me. It's a really good company. There's a reason why it's my top holding. Netflix is down 7.9% in the past 30 days. So this one has really been hit. Amazon's actually in the red. Amazon has been a big underperformer this year. This one has also contributed to me underperforming SPY so far. We have Alibaba, which is the single biggest contributor to underperformance. This one has been really bad for the portfolio. It's again continued to trade down. So even in the past 30 days, it's down 13.69%, another $1,000. A fourth of my losses over this time period have just been from Alibaba alone. And it seems like there's no end in sight. Whether there's good news or bad news, investors continue to sell out of Alibaba and any Chinese stock in general. Now, overall, all time, I've lost around $4,500 on just this one holding. So it's been a pretty bad one so far, but I am still optimistic in the future. I just believe this one will need a lot of time. Then we have Microsoft. Microsoft has done well. Microsoft and Apple both have done really well, Apple especially. I think that Apple's trading up quite a bit. It's getting up to the range of like the 30 plus PE ratios. So this one might be getting expensive, but it's Apple, so I don't plan on selling it. We have Spotify. Spotify has also sold off along with the other tech companies. Salesforce has traced back. Adobe has traced back. These were two of my big holdings. We have Facebook up 4.88%. Facebook has a lot of optimism right now because of the Oculus. That thing was selling like hotcakes. So everybody got an Oculus for Christmas. I'm seeing it all over Instagram and social media, all over Facebook, all over TikTok. It seems like everybody got that device. So Facebook is doing well with the Oculus. Atlassian's held up okay. Twilio's down 11%. So this one's a big loser over the past month. Then we have Disney up 4.76%. This one's doing okay. Shopify is down 12% and PayPal is up 4.7%. So that's an overview of every holding, but what I want to highlight is if we go to all time now and we look at the actual breakdown of my portfolio, I've actually consolidated my holdings a lot. I've moved money from the smaller convictions into the bigger convictions. There's a lot of companies that I like that I want to have ownership of, but I just come back to liking some of them more than others. And the companies that I really, really like are Google, Netflix, Amazon. I like Microsoft, Alibaba, and Spotify. These are ones that I really, really like, and I'm putting most of my money in them. In particular, one that I'm making a really heavy bet on is Netflix. Netflix alone is 17% of the portfolio. Google's the only bigger holding with 17.1%, and I intend to push both of these holdings up to around 20%. So I've used this sell-off over the past 30 days of Netflix as an opportunity to buy more of this company. I look at all these companies and I think they're all great, but when I come back to it, I just keep thinking about Netflix and Google. I think about the future of these companies. YouTube is a force to be reckoned with. This company has YouTube Premium. They have, in my opinion, a service that doesn't have any comparable competitor. There's no one else doing what YouTube does. No one else monetizing in the same way. And it's growing at an astounding pace. It's already surpassing Netflix in total revenue. So I think that Google has a very bright future. I don't think that all of it's priced in. It has an incredibly strong balance sheet and it has ample growth ahead of it. Netflix is another one that I'm buying right now because I have a completely contrarian view on this company. Most people view it as expensive. I view it as inexpensive. I think the company's trading cheap right now. With the level of risk it has, which I estimate to be incredibly low, meaning I don't think that Netflix is going to be disrupted. I don't think there's any competitor that can really eat its lunch. I think it is the clear winner of the streaming wars. I think it has a huge runway of growth. It will have hundreds of millions of more subscribers than it has today. I think the company's trading at a relatively cheap price. So this is one that I'm buying as well. And then we have Amazon, which has underperformed, and then Alibaba, which has been a complete flop. But I'm concentrating into these top picks, especially Google, Netflix, and Amazon. Other ones that I'm bullish on, I'm still bullish on Spotify and Apple and Microsoft. I think they're great. But I am consolidating the majority of my money into these highest convictions because I feel so strongly about their futures. Now, what does all this mean for the Story Fund and the future of this portfolio? Well, it means a few different things. First of all, a lot of money is going into a few companies. So this is going to be a more concentrated portfolio. And as such, in traditional financial theory, more concentration leads to higher risk. So I'm putting a huge bet on Netflix. That increases my risk being tied to that company. If Netflix does well, the portfolio will do well. If Netflix does poorly and the company just erodes and gets taken over by competitors, then this portfolio will do poorly. So in terms of traditional financial risk, having this level of concentration into Google and Netflix alone increases the amount of risk. Now, another thing this does is it separates my portfolio further away from the major indices. Before, I was spreading out a lot of money into a lot of tech companies. I had a lot of the companies in the QQQ, and I even had them weighted in similar fashion. And I was basically tracking the QQQ. And I thought that that's not really interesting, to just be tracking the QQQ with a portfolio that's mimicking it. And if I'm going to do that, I may as well just buy the QQQ. So I thought, what if I just put my money into my highest conviction bets, the companies that I feel the absolute strongest about, despite their weighting in the QQQ? The companies I feel the absolute strongest about are Google and Netflix, these two companies. And so I'm putting a huge weighting into a company that doesn't have a huge weighting in the QQQ. Netflix has like a 2% weighting in the major indices, and I'm giving it a 20% weighting. So this means that it's going to be further distance from the major indices. Some days it will go down while everything else is going up. Some days it will go up while everything else is going down. It's now going to depend heavily on how Netflix does as a company and how Google does as a company, not on just a broader market and how the QQQ overall is doing. So I actually like the fact that I'm now more distanced from the major indices and from the QQQ, and I'm actually bought into my actual convictions, my biggest bets, and the companies I feel the strongest about. And I think that this will be more interesting to track and to view over time if these companies play out well, and if these bets play out well. Now, with that said, I want to give a warning here. A little bit of a warning to not copy this portfolio. Having so much of it tied to a couple companies like Google and Netflix really does increase the concentration. It makes it so the portfolio is going to be more volatile. It'll trade differently from the major indices, and you might feel like you're underperforming. And this causes people that don't have the same level of conviction to sell out at very bad times. When the portfolio trades down or Netflix has a bad quarter and it seems really negative, you might sell out at a loss. So I'd actually recommend to not copy this portfolio. It is unlikely you've done the same research, you have the same conviction level, and you like these companies the same way that I do, or see the future the same way that I do. And unless you do, it's probably a bad bet to try to mimic the portfolio. I think in most cases, for most people, if you want exposure to high growth tech companies, you can just buy a tech market cap weighted ETF like the QQQ or SCHG or many of the other ones. But either way, I am going to continue to show week by week live what's happening with this portfolio. The performance of it, good or bad, you're going to see it completely transparent. We can watch together whether I'm right with Netflix and Google, whether these companies continue to perform really well and even outperform expectations, or whether they completely fumble and burn to the ground and I lose money. Either way, I'm going to show it completely transparent. I have very high expectations of them, but we'll see how it turns out. Now let's go ahead and move on to my top 10 predictions for 2022. Now, unfortunately, I am not a fortune teller. I can't really see the future. These are predictions, but this is what I believe strongly will happen in 2022. Number one prediction for 2022, COVID will end. And I know that technically it might not end. Technically there will be cases, but I think for all intents and purposes, in terms of mind share and actual damage that it's causing and shutting down society and regulations, I think most of that's going to be over by the second half of 2022. There's a couple reasons why. First of all, the new Omicron variant, from all the data we have so far, it's less severe. It is milder than the Delta variant, and it's spreading rapidly. When it spreads rapidly and it's milder, I think that will make it go through society quicker. And without another variant or even more variants afterwards, I think that people have moved on from it. I think people are tired of talking about COVID. I think businesses are tired of doing regulations centered around COVID. I think in general, society's ready to move on, and the data shows that we might be able to move on very quickly. So unless some other huge variant comes along that's super damaging and lethal, I think Omicron might be the quick end of it. So my first prediction is that COVID, for all intents and purposes, will be over by the end of 2022. Now, my second prediction goes kind of along with the first one. It is related. I think that restaurants in general across the US will have record dine-in numbers, meaning I think that the amount of people that are dining into restaurants will be higher in 2022 than it was in 2019 or 2020 or 2021. I think it will surpass any of those years. We already see that a lot of restaurants are getting more demand, and this is something that we can see across the industry. Omicron has set this back a little bit, but again, I think Omicron will be short-lived because of how quickly it's spreading and how it seems to be less severe. So I think that coming into the second half of 2022, we'll see a lot of people wanting to get out of the house. There's already an uptick in demand for services, and restaurants are part of that experience. Bridgewater recently did this study, and they showed that the amount of demand surging for services is crazy. It's on a huge upward trend, and unless there is continued reason to stay home like the Omicron variant, it's going to continue. And of course, restaurants are a huge part of the experiential service industry. Anytime you travel or you go on vacation or do anything outside of the house, most likely you're eating at restaurants. So I see this graph and this chart continuing to climb, I think, into record high numbers. Prediction number 3, software companies will make a comeback. We know the recent beatdown that a lot of the smaller software tech companies have had recently. Many of them are down like 50% plus from their all-time highs. So they've really had their valuations chopped in half or even down 75%. A lot of companies have sold off like crazy, but these companies are still valuable. Many of them are still growing 40% revenues year over year. And it is true that their valuation did get a bit ahead of itself. Many of them traded up to astronomically high prices, but they've now sort of been reset, I think, down to safer valuations. We can look at this overall. IGV, the tech software index, is actually underperforming the S&P 500 by a large degree this year. It has 15% returns, while SPY has 30% returns. And IGV, the companies this holds, are growing much faster than the average SPY company, like multiples faster. So even though it has underperformed this year, I think it's likely to make a comeback. We can also look at WCLD. This is a cloud computing ETF that has underperformed the S&P 500 by a lot. It's actually in the red year to date by 0.4%. So zero gains with the 40 companies in WCLD. These are all the cloud computing companies that have an average annual revenue growth of above 40%. So this is an index of really fast growing companies. And it's absolutely true that these companies' valuations did get way ahead of themselves. But like we've seen, they've made no gains for quite a while. They're still growing rapidly, and it's only a matter of time until the actual growth of the company catches up and surpasses the valuations. So like many times in the market, the temporary pullback and underperformance of these high growth companies, I think will be temporary. And I think that next year they'll actually outperform the rest of the market. Prediction number 4, Netflix will continue their lead in the streaming wars and they'll end 2022 with the most subscribers of any streaming service. And despite the best efforts of Warner Media and Discovery and Amazon Prime and Disney Plus, it'll become more abundantly clear that Netflix is the runaway winner in this category. Now, I think there will be other successes in the long run. I think that the industry in general will consolidate to a couple of the bigger companies like Amazon Prime, Warner Media, I think will be around for a long time, and of course Netflix and Disney Plus. But a lot of the smaller streaming services, the more obscure ones like the premium channels Showtime and Star, they'll just have to sell their content or license it to other services because I don't think they're going to be able to maintain their own streaming service the same way they are. They're spending more than they can sustainably. And I think that in 2022, it'll become more clear how dominant Netflix is, and the advantages that Netflix has, I think, will become more clear to investors. Prediction number 5, the labor market that's super tight right now, I think eventually a lot of people are going to be returning back to work in 2022, specifically the second half of it, because I believe a lot of people are running slim on their savings, and it's only a matter of time until they'll be pressured financially to seek work. We can look at what happened in 2020. We had record levels of savings. This was a combination of people being scared, and when people are scared, they naturally save more money. And we also gave out record stimulus. So everybody was getting checks deposited into their checking accounts. And this happened twice. You can see the 2 rounds of stimulus here. The savings rate was through the roof. Well, all this additional stimulus, freezing student loan payments, the enhanced unemployment benefits, as all these things come trickling to an end, people's savings are going to be slimmed down. And when that happens, I believe that many of these people will return back to work. So my prediction is around halfway through 2022, a lot of people are going to be trickling back to work. Prediction number 6. This one may surprise you. I've thought about this one for a while, and I've actually changed my opinion on it. I believe that in 2022, the issue with meme stocks and extreme speculation, things like GameStop, AMC, Floki Inu, all the different crypto coins that are completely worthless, I think all of that stuff in general will become a growing issue. It'll get worse, not better. I think that 2022, we're going to have more of it. It's going to become more present in social media. There'll be more money flowing into it. And speculation will get worse and worse. And I don't think the Fed interest rates are going to affect it at all. I think the only chance of it getting better and less people doing this is a deep recession. I think that's the one thing that could really crack it. But I think that overall in 2022, despite interest rates likely going up, I think meme stocks and speculation is going to be a worse issue, not a better one. Prediction number 7, in 2022, EV companies, automakers, I think across the board, most of them in aggregate will come down in valuation. I think there's way too much money and excitement and enthusiasm priced into all these companies. And this isn't any company in particular, but we can go through a couple of them. Tesla's at $1 trillion market cap. It may be justified. Tesla probably has a bright future, but this is a pretty good run. It's above $1 trillion market cap. Then we have Rivian at a $92 billion market cap without making hardly any vehicles. This is one example of a company that I think there's so much excitement and enthusiasm priced into this stock. We have Ford at an $82 billion market cap. This is one of the highest points Ford has ever been in its entire history. The only time was in 1999. They're like the only car maker at that time. We have GM at an $83 billion market cap. It's never traded this high before. Moving on, we have Lucid, another huge market cap EV company, trading at a $60 billion market cap. It's another really big one. Then we have NIO trading at a $47 billion market cap. This one's came down a little bit. So overall, these companies are priced with a ton of enthusiasm. They have very high market caps, and all of it is based on future potential and future sales. And I think in general, not all of these are going to be big winners, and the majority of them will come back to earth with their valuations. Prediction number 8. In 2022, the Chinese stock market will outperform the US market. And this is mostly based on the fact that while the US market continues to go upwards every single day and valuations get more and more stretched by US firms, Chinese companies have had just the opposite effect. They're still growing, they're still doing okay fundamentally, but their valuations have been chopped in half. Alibaba's down 50% year to date. And a lot of people thought it was cheap this year when they were buying it 50% or 100% higher prices. So Alibaba is this great company growing quickly that continues to have its valuation lowered and lowered and lowered. And typically when that happens, over time, it may outperform. The opposite thing may happen. We can also look at Tencent. This company is a fast-growing, globally dominant company that owns basically the entire gaming industry across the world, and it's down 21% year to date. This stuff doesn't really go on forever. I think that eventually, investors will realize that China's not going anywhere. It's going to be around for the long run. They are a major player. They make lots of huge products, like all the games that Tencent owns, all the fulfillment and everything that Alibaba owns. We have JD, another company in China that's like the Amazon of China, that's down 23%, and it's growing rapidly. And I don't think these companies are going anywhere. So I think there's a very good chance in 2022 that these companies outperform. Prediction number 9. In 2022, Apple will release an AR or a VR headset. And the reason I believe this is because we know that Apple's working on this. They're hiring away employees that are for AR or VR application. And they're looking at Facebook, or Meta rather, running away with this hardware product. And Apple needs to be competitive in hardware if they want to keep their same market share. Meta's Oculus Quest 2 was one of the top selling products, not to mention the Meta Oculus app topped the App Store in the US on Christmas Day. So it looks like over Christmas Day, Meta sold a ton of those Oculus 2 headsets. It seemed like everybody has one now. And I know that Apple's looking at this. They want to be competitive in it. And my bet is that in 2022, they're going to release a VR or AR headset. Prediction number 10. In 2022, YouTube Premium will have over 100 million subscribers. So I think they're going to double the amount of subscribers, over double it from their current 50 million to above 100 million by the end of 2022. And this is a big increase because from last year to this year, they increased by over 20 million. And I'm saying they're going to increase by over 50 million. The reason I believe this is because YouTube has shown they have the recipe. They know how to get people to subscribe to YouTube Premium. It's such a convenient thing. It gives you downloadable YouTube videos. It gives you all these new perks. They're going to be adding more and more features to it. They're going to make the value proposition even better in the future. You get no ads with YouTube Premium. Plus, they're also including YouTube Music along with YouTube Premium. So the value proposition is insane, and they already have so many users on the YouTube platform, so many people to convert into premium subscribers, that I think they can easily double this from 50 to 100 million. So there's my 10 predictions for 2022. We'll check back at the end of next year and see how these played out, but I hope you enjoyed the video, and I'll see you in the next one.